All right, so we'll have a quick review of what we discussed in the previous session before we proceed. Right, so we spoke about Pchq's liquidity, and we also mentioned liquidity points. I won't spend so much time on the liquidity points. You already know them. Asia high or low, yesterday high or low. Of course, you could go higher and be talking about weekly high or lows, as the case may be. You use those same methods when you are dealing with one shot, one kill, Judah swing, and all the other terminologies that fly around in the market, right? But I'm going to review Pchq and liquidity here. If you have fractal points, remember our fractal points are Pchqs. Let me use this. If you have fractal points, one at the top and another beneath, and you are planning to sell, this becomes your C liquidity. We'll call it CLiq, and this becomes your Pchq, right? You would be anticipating price reversals, whether short-term or long-term, as the case may be, depending on whether it is aligning with the higher time frame bias or is a pullback. If it's aligning with the higher time frame bias, you expect it to be a long sell. And I expect you to go pair it up with a higher time frame liquidity of Pchq on the opposite side. If it is counter trend, then you just want to go in and catch 10, 15 pips, 5 pips in some instance, and then get out. So you want price to move towards this region, take out the C liquidity, and sometime you may take out the Pchq. You will be waiting for a price action, confirming a sell. And that will be a close beneath the highest bullish candle or any other form of bullish and bearish candlestick pattern that you feel comfortable with. You can have a bearish pin bar. You can have an inside bar, confirmed inside bar, bearish inside bar, right? I prefer using a bearish engulfer. And so once you get that, you would be initiating a sell. Typically, once you've gone some number of pips, depending on your time frame of entry, you break even and let the trade run. Like I said at the beginning, before we started recording, there are times after you break even, price will come take you out at B, E, and C, proceed in your direction. Just live with it, right? You can't be right all of the time. You can't get the market all of the time. But as a scalper, especially if you're going against the trend, you must be willing to protect your profits as soon as possible. And then you let it ride. Where would be your exit? At what point would you be getting out of the market? You should be anticipating Pchqs and C liquidities to the lower side of the market, right? I did an example yesterday. I tried not to close the trade on demo account so I could show you guys as we proceed. I'll show you guys that example and I'll come back to the whiteboard. So I took a trade yesterday on, let me clean this up. I took a trade yesterday on NZD USD, right? NZD JPY, I beg your pardon. And that's the trade, right? We all, if I go to, let me see what time frame, I think I should have it. Let's use another template. In this template, I used my 240. Boom, right? I used my 240 as my higher time frame bias. So price came to that fractal. You see that? It came to that top fractal, and I was entering from 30 minutes. Sorry. Yeah. My entry for this was 30 minutes. This wasn't a scalping, but I'm just showing you guys the concept, right? So this is a fractal high. This is a fractal high. This is a fractal high. Remember all those. So this will become our C liquidity. Then these other two fractal highs become our Pchq, right? This becomes our C liquidity. And these other two fractal highs becomes our Pchq. Now I want you to get that, right? So price came for this C liquidity. And I'm going to give you guys a hint. There is an indicator. It's called alerter. When you have find an alerter, this system I'm using, I use 4 hours here, right? You could practically just draw a line here. Or if you have an app on your phone that tells you, that sends that can ring or gives you an alert when price reaches a particular region, you could just come with your cursor and you can see the price range there, 76.315. When you see that, you set the alert. When price gets to this point, it's going to alert you that price has got to that point. That is when you now come to the chart. If you sit in front of the chart all of the time watching, you'll see things you shouldn't see, right? I'm deviating a little from scalping, but I want you to get the concept first, then we'll go into the scalping properly. So price came to this region, I got an alert, and I started coming back to my chart every 30 minutes. I was waiting for, a sign that price has really broken my structure. So price came, I didn't get a bearish engulfing candle. I got this bearish engulfing candle, but I wasn't happy about it. The reason I got this bearish engulfing candle, where is that? Where are you? Yep. I got this bearish engulfing candle, but I wasn't happy about it. Why? Because it was still within this bigger, will I call this a doji or whatever, right? It didn't close below this. This was the highest bullish candle. I never closed beneath the highest bullish candle. So I didn't take this as a bearish engulfing. I wasn't going to take this trade. So it kept going. This is another bearish engulfing candle. But again, as you can see, this is the highest bullish candle and price never closed beneath it. I'm just checking on my phone every 30 minutes. Just check your phone. That's all. At the close of the 30 minutes candle, you check. Nothing happens, you let it go. Nothing happens, you let it go. Right? So price eventually created a new high here. And then I didn't get to close beneath. I didn't get to close beneath. I didn't get to close beneath. Boom, I got to close beneath here. Right? I got to close beneath here. This was the highest bullish candle as at that point in time. Here. See that? This is a close beneath. That is my entry. Tuck your stop loss a little bit away. Boom. The trade goes. Where should be your exit? The next fractal points. And that's it there. So if I had my TP at this C liquidity or this paycheck, this would practically have taken me out overnight. And then I'm done. Right, so that's one example. Let's go back to the whiteboard. So I want you to grab that. Again, there is a twist to that. In the month of February, I will start a free session. I'll take you guys again through the scalping method, a second entry. I'm going to cover only one entry today. We're going to discuss a second and third entry pattern in February. And then we'll look at an intraday strategy using the same methodology, the one I just used now, the 4 hours or higher time frame for free. So just stay tuned, invite your friends to join, subscribe and like the channel. Right, so once you get your C liquidity and paycheck, you're anticipating price to come there and then you sell. Now, I think we're done with that. You do the same thing if you're anticipating a buy. Now, why do you need to break even and since you are scalping? There are times where price may not get to this liquidity and paycheck and we just make a U-turn. So once you've gotten some level of profits, break even and be risk-free. It's better for price to take you out at break even than go hit your stop loss. If it takes you out at break even, fine. I won't say you wasted your effort, but you never really lost anything, right? You never really lost anything. So depending on I don't want to give, I have a trade plan here. Well, I'll let you guys go write your own. We always have trade plans for everything we do, but go write your own, right? It depends on the pair you are trading. For instance, I can't say after 10 pips break even. That may work with AJ and may not just work with GU. GU can do 10 pips to the opposite side and then continue, right? So you need to know the type of pair. You look at the ATR of the pair and you look at the volatility. You shouldn't do something like 10 pips on gold. It could do that in just one tick to the upside. So you need to know all of those smaller things that people don't say that bring about profitability, right? So you could do the opposite for a buy, right? Now, the naughty part about this is that you can trade this strategy for both buys and sell. However, it is sweeter if you trade it in line with a higher time frame bias, which we'll cover in February. Today, we'll cover trading both up and down, which has a slightly lesser win rate, but still profitable. The challenge is, how do you know if you should be buying or selling? So the last webinar, I introduced you guys to one indicator that simply just prints a different color for when it is buying or selling. Simple. So for those who are relatively new to trading, you can't identify market structure and the break in market structure. You just use this indicator. It tells you if you are buying or selling depending on the color, and you simply trade that. So when the indicator is telling you to go bearish, you would be looking for clicks on the top edges for you to sell. And if the indicator is telling you buy, you'll be looking for pullbacks to clicks on the bottom edges for you to buy, right? It's as simple as that. You're looking for clicks. Again, I'll take that part again. We're going to use an indicator. I told you guys, those of you in Simply Pips already know the indicator and in the fostering program. And I also gave you guys how to find it on TradingView, right? If the indicator is telling you to sell, it would have started selling before it tells you to sell. It would have started selling. You would be looking for pullbacks to the top edges, which are the clicks and the paychecks, for you to sell. And if the indicator is telling you to buy, you'll be looking for pullback to the bottom edges, clicks, for you to buy. So let's go to the chart now and see how we apply this. Okay, let's see. Wow, this NZD-USD. Yeah, before we proceed, in the last lecture, I told you guys why I bought NZD-USD, and this was the still liquidity taken. It went, I took some profits, it came back, I didn't budge, and I was anticipating that it comes all the way to this level here, but alas, it never did, and it rolled over and came for a sell, right? So I practically broke even on that trade, but that doesn't mean anything. Why? Because there was another sell here, right? Again, this is C liquidity. Price came for the C liquidity and then dropped, right? Where would you expect it to go to? C liquidity, paycheck. If I put a line here, you'll see exactly what I mean when I go to a time frame like 15 minutes. Go to a time frame like 15 minutes, you see exactly what I mean, right? See that? Can you see that? See that C liquidity? See how price came straight to it, boop, took you in, and then ran away, straight up, ran away, right? So let's use this method. Now, you could do this on 5 minutes if you want to scalp fast and get out and go do other things with your day, or you could do this on 15 minutes if you want to be, a little bit more conservative. For those of when I cover the long term, we'll be doing this on 30 minutes using 4 hours. So let's come here and I'm going to change a setting here. Sorry. Yep. Let me make this 4. And I'm going to come here and make this 0. Great. So this helps me get more entry signals. So I want somebody to, in the chat box, drop a pair for me. So it doesn't look like I'm cherry picking. Just drop any pair for me in the chat box. Any pair of your choice in the chat box, guys. Let's see. All right, so I can see EU, EG, GJ, GF, EU, but no problem. Let's even look at Bitcoin first, right? So if you have been following for a while, I told you guys we were anticipating to sell BTC. I still have my buy orders at 49 plus, and I told you guys why. I have my buy orders sitting somewhere around here, and I'm at 29 plus. Yep, I have my buy orders around there. It may come, it may not come, but I see no reason why they won't spike down before going up. Again, you can see the reasons on the chart using our fractals. Here we have Bitcoin. Remember, you are scalping. As a scalper, you are not planning to be there for so long. You just want to go in and go out. You just want to go in and go out. So look at this. This is a bullish signal. This lime green is telling you, let's buy. So what are you planning to do when you get less buy? You're looking for buys. But would you just buy anyhow? No. You'll be waiting for price to come to lower fractals to give you a reason to buy. I used 0 here, but for Bitcoin, I advise you don't use 0 because it's very, very volatile. So you have to choose a time frame, maybe choose 15 minutes or something. Let me do that so you get what I'm saying. If I come here, I come to my fractals. Okay, I want to see my fractals of 15 minutes, or let's say fractals of 30 minutes, something like that. Right, you want to see fractals of 15 minutes, fractals of 30 minutes for your Bitcoin. It gives you something to play with. Okay, so here we are. We're using fractals of 15 minutes, for instance. This is supposed to be bullish. You would be waiting for when price comes back to tap this lower fractal and give you a reason to go long. Unfortunately, we would miss this trade if you are trading off 15 minutes. If you are trading off 5 minutes on a 15-minute fractal, you miss this trade. In February, we might discuss how you can catch this trade. But for now, let's keep it simple. You miss this trade simply because this is now telling you to sell. So you'd have missed that trade because at the time it's coming here, you wouldn't be looking for buys, right? But if we left it the way it was before, at 0, which I don't advise you to do for crypto, because it's very, very fast. So you had a buy signal somewhere around here. Price came, took out that fractal, didn't really close above the lowest bearish candle, so that didn't work. As at this point, this became bearish again, so you're no longer interested. Now, but we are still bullish here. This is still green, you are still bullish. Price came all the way up, came back, look at that, came back, took out CLiq, Pchq, that is your entry there. Once it closed above this, you are in for a buy. Boom, you get in at that point, bullish. Where are your take profits? As at the time you are entering this trade, where are the liquidity points you can see? Up here, you have a CLiq, right? So you go in there, put your stop loss somewhere below, and now you have 1, 2. So let's say you enter at this point and you had let's say 17 pips stop loss. At around this point, you're already more than 1:1, about 1:2, and you're out of the trade. You are scalping. You're not planning to be there for a long time. In February, when we look at how you can trade it in line with a higher time frame, then you know how to enter and hold it for much longer. But here, you just want to see that this is bullish. Because it's bullish, you want to be buying when price is selling. Price is selling downwards. Where are the places where you are looking for buys? You're looking for buys around here, around here, around here. But what's your entry trigger? It closes above the lowest bearish candle. That happened on this candle. That is your signal to go long, and that is your trade to the upside. Let's pick some of the pairs some of you dropped. You dropped, let's see the very first one. Someone said EU. So let's go to EU. All right, so here we have EU. Just today, EU gave us several trades, right? EU has given us several trades today. You woke up this morning and EU is bearish. Let's magnify this a little so you guys can see. You woke up this morning, EU is bearish, right? So where are your entries for EU? Let's see when the markets, when you would have gotten into this market, sorry. Okay, so let's put a line here. This is the close of the Asia session. This strategy you can use even in the Asia session, but I don't trade Asia session, right? You'll be sleeping by then. If you trade Asia session, this is a clear trade here. It came back to that C liquidity and then dropped, right? Came back again to the C liquidity and then dropped. That was a great one. But here is the trade for us this morning after Asia session. That is the C liquidity, that blue line. See how price came for that C liquidity, tapped it. You got a close beneath the highest bullish candle. You enter your trade, boom, you win all this. Right? See again, price came for this C liquidity. See that C liquidity, price came, tapped it, no close below, tapped it, no close below, boom, close below. You enter at that point, zoom down, you win that trade, right? So you would have had 2 trades today, scalping, and you would have gotten 10-5 pips, 10-5 pips, and you're out and you're done today trading Euro USD. Does this make sense to anybody, please? If you understand what I'm saying, please put a 1 in the chat box if it makes some sense to you.
Perfect sense.
Great. Great. So remember, not everybody is a scalper. Not everybody can sit down. It's easy for me to just say, wait for price to tap it and move. This is 5 minutes. You have to be on the chart watching it. It's different from the earlier one when I said you could set an alert, right? That was a higher time frame that will cover in February, by God's grace. So again, somebody mentioned, but that's it today. Let's see a buy scenario. Okay, so you're looking for reasons to buy here, right? This was bullish. Look at that. You got bullishness from this green place. See how price came for the liquidity, Pchq, no close above the lowest bearish candle. Boom, what is this? A bullish pin bar. This is a bullish pin bar. You can enter at the close of that bullish pin bar for your long, or if you want to be more less aggressive, wait for it to close above that candle. Whichever one you took, you got a winner. You would have been harvesting some of your profits right about here. Now, there you have your C liquidity, you have your Pchq. Forget about all this, right? One of the things we'll cover in the fostering program is you have to be comfortable to leave something on the table. Leave some money on the table. There's 4 fears people have: fear of missing out, fear of being wrong, fear of leaving money on the table, and one other fear, right? You fear of giving back to the market, right? You have to be willing to leave something. Your strategy says when you get to the opposite, C liquidity, Pchq, get out. If you got in here with one standard lot, depending on your account, and you are planning to risk $100, by the time you get here, you would have netting about $200 or 180 something. I mean, get out. It's scalping. You are scalping, right? When we get to the level where you want to trade in line with the trend, that's a different kettle of fish. So see this guy again. We are still bullish here, guys. We are still bullish. What did price do? It came back, never really closed above this lowest bearish candle, came back, boom, closed above the lowest bearish candle while we're still bullish. Initiate your trade here, put your stop loss below. This small move to this point would have given you 1:2, right? But you don't even have to wait for that long. Once you hit the opposite side, harvest your profit. It could be 20, it could be 5 pips, it could be. And if you don't want to harvest the profit, break even, guys. Break even. It's as simple as that. If you had broken even, price went, came back, almost took you out, then pushed up, pushed up. If you didn't close, boop, break even. Break even is sweeter than loss. I tell you guys, break even is sweeter than losing. Better you break even. Remember where you want to take your profits from. I'm going to flash this on the screen just so some of us can see it, but please go draw your own trade plan. Go write out your own trade plan, right? Go write down your own trade plan. Go play with it. Go play with it, right? Okay, so let's move on. Right, so I think I've given you examples of buy and sell. Again, this is a scalp. Somebody say, are the fractals 5 minutes fractals or higher time frame fractals? These are 5 minutes fractals trading on 5 minutes. That's why I have that point at 0. But when we use it for long-term trades, we use higher time frame fractals, and then we trade on 15 minutes or 30 minutes. I prefer 30 minutes. So we're done with EU. Somebody said EG. Somebody said EG. So let's check EG out. All right, so let's see EG. This is, can you guys see the trades already? I bet you can see the trades already. I bet you can see the trades already, right? So you got one trade here, and it would have gone straight to your SL, no problem. Then you enter another one, and that would have given you winner, another trade here, winner, another trade here, winner, another trade here. Look at that, look at that. That small bearish candle came for this one, close above, you would have entered at that point. That was another trade for a scalp, right? They came back again to this level, you'd have entered one here. It played with you, somehow started going in your favor, you break even, it took you out a break even, gave you another one, you entered again, it pushed up a little, never really got to the top fractal, you break even, always break even, guys. It came back, took you out, no problem, gave you another entry there, you're waiting for them. The lowest bearish candle was this as at that point in time. You had a close below the lowest bearish candle, you enter, and finally it gave you back all the profits, right? But notice the number of times, those of you in the binary class, you know this signal, you know it very well. You would have had four winning trades here in binary, right? Again, that was that for the buy. Oh, let's look for the sell. Let's look for the sell. Oh, this happened in Asia session. We don't trade Asia, even though we got some signals, but let's leave Asia out and deal with what we deal. This is a sell trade. Price came, never really gave you a signal, and then became bullish. Right now, price is bullish. Price came, boom, boom, took out those low, took out the CLiq, took out all the paycheck, and then you got a close above here. Boom, that is your trade. Where are your take profits? All of these levels here. Bam, you're done for the day, guy. You're done. You came back again, you took out the paycheck and liquidity below, CLiq, danced around, went, you harvested some profits, came back again to that same point, gave you a close above, and boom, up it went. Right? You came back around here, and you didn't close above the lowest, highest bearish candle, no close above the highest bearish candle, and it started printing down candles until the signal became bearish. I don't know. I need to ask again, is this thing making sense? I need to ask you guys again.
Very much sense, sir.
Very good. So, and please, I want you to know that this is, I've repeated it like a dozen times. This is a scalping method. What I'm showing you guys is a scalping method. And it's not as easy as I'm saying it. Why? You need to be on the chart to see it happen. I've been trying to get a way to code it. I haven't been able to get a way to code around fractals. I haven't. Because if I call up fractal here, and some of the guys coding for me, when they call up fractals under Bill Williams, they just see fractals everywhere, right? So how do you tell? I mean, it's been difficult, except if you have somebody that can do it for me, please let me know. So that way, like we told you guys in Simply Put, this year will be less visible on Telegram. We're trying to reach out to more people. So we're looking for ways we can code our strategies to either take the trades or send signals to us, right? Again, let's proceed. This is a sell. Can anybody see that sell trade? Somebody who wants to unmute and talk to me. Anybody here wants to just raise up your hand? I'll pick up one person who wants to unmute and talk to me. Raise up your hand. Your digital hand. Sorry, I can't see you, but raise up your digital hand. Yes, it's Zodua. Let's have you unmute yourself and talk to us. Izodua, are you there?
I'm here.
Oh, great. So on the chart, we have a bearish trend off of that indicator. Can you see a sell trade there?
Yes, I can see.
Can you describe where the sell trade is? This is the fractal high, which is the CLiq. This price pushed through. So how many candles away from here do you have your sell?
1, 2.
Very good. So at this point, we have a close beneath. You initiate your sell, put your stop loss. Where do you think you place your stop loss in this kind of situation?
In this kind of situation, a little above. Since I'm selling, my stop loss will be above. Above
yeah,
the fractal.
Above where?
Above this fractal. This fractal, yes.
This one?
No.
This other one?
My stop loss is higher than that. Yes.
Yeah. Your stop loss should be above this point. Why? Because these are paychecks. You don't know if they want to come back and just wick through these paychecks before running. right? So you tuck your stop loss a little above. I have some friends that would even take this trade simply because price came very close to these paychecks. They believe that, look, the algorithm or price market makers will not allow these paychecks just go for free. But again, take your trade. That is your entry. Look at your TP. See how it snapped your TP on a scalp, right? And after I took out the TP, it pushed back up a little, right? Again, you cannot, I have not seen a profitable scalper that has not conquered greed to a level. I don't want to say has not conquered greed. Nobody conquers greed so long we're alive, right? We all fight greed. We all want more. We all want more. When I started trading, I told myself, once you start making $2,000, you solve all the problem in your family. Well, I got to $2,000. All of a sudden, $2,000 wasn't enough. I needed 5. Then I went to 10. Then I went to 20. Right? So that's how it is. We are all greedy. But when you want to scalp, you must know that you are looking for certain level of precision. This is one C liquidity, right? Then these are the paychecks. Note, this level here will not have printed, so you won't see this. You won't see this level. This is the level you will see. You will see this one. You won't see this as at the time you are taking your trade. So when price came, it came here, boom. This is one level where you can either take profit and take a walk, or break even and wait to see if price will push lower. Or if you're in line with the trend, then good. You put your stop loss where you're supposed to put your stop loss and let it ride. Of course, for those of you who have been with us before, you know, those of you trading HPLR, what setup is this? What setup presented itself today? Anybody who knows the name of the setup? You trade HPLR, what's the setup that presented itself here? Anybody? The name? For the sell. Our entry will be at that same point too. But what's the name of the setup? Anybody that trades HPLR?
RCE.
RCE. That is an RCE, right? Price took Asia low, then gave us a retracement continuation entry that tallied with our point. And so you guys trading HPLR would have done RCE. Those of us doing scalping would do RCE and we'll all move. Of course, would have done this in tandem with the higher time frame, right? So if you are trading fractals, if you are trading scalping, this is your TP. Again, I tell you guys, if you enter at that point, put your stop loss below, this will give you at least a 1:1. Which in they find, maybe your papa get the money, take your own and move. But should you say you want to be greedy because you want to be running kitty kata, there's no problem. Break even, just break even. This is another paycheck. This is another paycheck. When they will eventually make a U-turn, it will be at a paycheck. Look how they hesitated at every C liquidity. Hesitated, hesitated. You see that? Right? Can you see another trade here? Oh, there's another trade here. There is another trade here. Now here you see the reason why you need to do break even, right? That's another trade there. If you didn't break even and you are anticipating that, oh, Bishop has said it must come to the next paycheck. Anyway, there was a paycheck here and there's a C liquidity here, I beg your pardon. So I won't take this trade. I know Taiwo understands why. This C liquidity is too close. This is my first point of take profit. And it's already too close. There's no point in taking this trade. Right? This is my first point of take profit. It's already too close. There's no point of taking it. You let it go. This was another good trade you would take and hit stop loss sharply without apology. You take this trade and to hit your stop loss without apology. Accept your loss and live to fight another day. Move your stop loss and your account blows forever. Accept the loss, you live to fight another day. Run away from losing, you accept the mother of all losses. It's as simple as that. Here's the third trade. Again, this one that hit your stop loss took out 1R. Your 1R can be 0.25, 1%, 2%, whatever. This other one gave you more than that, guys. More than that. Can you see another entry here? Whoosh! Perfect entry. Look at where I went to. You saw this, your C liquidity. It came from there straight to your C liquidity and took it out. Guys, I have another meeting for 2 o'clock. Somebody needs to call me. So I'll be wrapping this up and I'll see if I can post this video much later. In February, like I promised you guys, we will find a way to give back to the community for free, but that shouldn't be completely free. Let's see if we can get our YouTube channel to what number? Let's get our friends to subscribe. Let's get back the YouTube channel to, I don't know, I'll post it in the Simply Pips group later on, and then we'll proceed. So I hope you guys enjoyed the lecture today.